And Shamu from IG in Melbourne. Stan, thanks so much for your time. We should talk about Wall Street's comeback first of all, because it was pretty impressive. It scooped up 0.9% in about an hour, obviously on the back of some developments on the fiscal cliff front, because this is what was weighing in the first place.
Yes, absolutely. It is definitely a headline risk market. We actually did see Europe edge higher overnight, but that swiftly changed in US trade when Senate Majority Leader Harry Reid came out with those comments suggesting that he doesn't actually feel they'll come up with a deal by January the 1st. So that did see risk trade quite negatively throughout US trade. And like you said an hour ago, it did seem like it was going to be a fairly weak, it did seem like it was going to be a fairly negative close for Wall Street. But we did see the market storm back on comments that Republicans are set to reconvene, and this might help them come up with a last-minute solution before we get to that expiration of well, before we get to the fiscal cliff. But it certainly seems like risk has now started to pick up. The last I checked, I did see some of the risk currencies come off those lows from the US trade, and at the moment it does seem like our market is also now looking at a fairly positive start. So it certainly is a big turnaround in most markets, and at the same time, if you really do look at the risk currencies, it does seem like that improvement will extend through to Asia as well. I think the euro was one of the better performing currencies overnight before it was hit in US trade, traded up to about 133 before dropping back to 132, and now it started ticking back higher again and headed back towards that 133 mark. So yeah, there's a lot to look out for. Unfortunately, the Aussie dollar hasn't quite enjoyed that sort of risk-on recovery that we've seen over the past hour. It's only managed a fairly tight range between that 1036 and 1038 level.
Yeah, you mentioned just the past hour was good for risk assets, but I'm looking at copper, and it did fairly well overnight, up 1.4%. And then we had BHP and Rio Tinto also higher in London trade. Does that bode well for our market today?
Yes, absolutely. I think when I walked in about 7, I think we were calling the Aussie market relatively flat. Now we're calling it up about 0.3% to 46.60. So that's quite a big improvement, and it will see us retest last week's highs. I think the high last week was around 46.58. So that's now quite a pivotal level to look out for. Of course, with iron ore extending its gains, I think around 3%. Trading at around 139.40 now, it will be a big day for the iron ore miners. So I don't think copper prices will make a big difference for some of these iron ore plays today. I think they'll be in for a fairly solid session. BHP is pointing up to about 36.20, closed at about 36.98 yesterday, so that's quite a big improvement already, and that should help support most of the materials space. We also had gold and oil showing signs of improvement, and that should be good for the gold and obviously some of the energy names as well. So yeah, it certainly seems like the Aussie market will be in for a fairly good session. Probably that will see us trade up about 0.8% for the week so far, and it's been a short trading week, so all things considered, that's actually very positive. And it certainly does show that most investors are still fairly optimistic despite some of the headlines we've had from the fiscal cliff negotiations. And it probably also points to the fact that the miners are probably looking more at the Asian region lead, particularly with Japan and China showing signs of improvement as opposed to the US fiscal cliff negotiations. But unfortunately, that will probably continue to have a play on the financials. They tend to react a bit more to the developments in the fiscal cliff, and I think that's what weighed on them as well yesterday.
Okay, speaking of Asia, let's talk Japan, because we're looking at a deluge of data out there. It's been a big couple of weeks for Japan. We've got a new leader sworn in. We've seen the Nikkei push up to quite impressive heights, and the yen, of course, falling to 2-year lows against the US dollar. What will this data likely mean if it comes in stronger or weaker for easing? Because that's what this whole story is about.
Yes, absolutely. Of course, one of the key metrics now is inflation. The new government wants to set an inflation target of 2%. So that CPI reading out of all that data will be one of the key ones to look out for. Should that continue to show signs of weakness, I suppose it means they've got plenty of room to act. At the same time, if all this other data comes out much weaker than expected, it puts more pressure on the government and the BOJ to act more imminently, and of course that will push probably the dollar yen even higher. It printed a high of, I think, 86.15 overnight, and this would certainly see it retest that high and possibly trade through that in Asia. Already we're calling the Nikkei up about 0.5%, so that will definitely see it trade through yesterday's high and possibly extend its gains should we see further weakness in the yen.
Okay, interesting, Stan. Thanks so much for checking in with us. We appreciate your take on all of that.
Cheers, Kate.
Stan Shamu.